Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar ran into some heavy, strong headwinds and tumbled away from the highs of 71.78, or where the resistance is at 71.85.95, and fell to a low of 71.39, which is where the minor support is holding at present. It all began after the RBA released its minutes for its April meeting. According to the minutes, its latest board meeting said that the RBA would consider it appropriate to cut interest rates this year if it saw a sustained rise in Australian jobless rate. However, any interest rate cuts would be less effective in boosting the economy than in the past. But the Reserve Bank says they would still help if jobless numbers start rising. Later on Thursday, we have the release of the Australian jobs report, with the unemployment change forecasted at 15,000.2. Previous was a lot lower at 4.6 thousand K. From a technical point, I believe the market is breaking down and struggling to try and capture this level around 72 cents. From the initial weakness and also the RSI breaking down, could see a move to 71.40. Now beneath there would trigger further weakness to 70.65.70. Resistance at this stage seen at 71.85.95. Well, the euro is slipping also after it couldn't sustain above 113. Now it looks back towards the support at 112.55. With the holiday shortened week coming up due to Good Friday and Bank Holiday Monday, is that we could see some whipsaw price action. Now the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded off the lows we previously saw around 3 weeks ago at 96.34.40. While we maintain above there, the market did advance to a high of 69. As long as we don't go under 96.40, then I expect to see further strength in the US dollar and weakness in the euro. Now sub 112.55 will give us the next target down towards a level of 111.60.80, where profit taking will most probably return. Resistance seen at 113.15 to 55. The dollar yen is still trying to push higher, and at this stage it's still attempting to take on the challenge to 112.45 after seeing a high of 16 this morning. As long as we don't break above 45, then I do expect to see the market turn away from 112.45 and look back towards 111.65 and reassess from there. The descending triangle continues and now looks towards that level of 129.70. Now I did mention before that the descending triangle measured move is a 125.5 if we see a break of 129.70. As the resistance slowly comes down, it is assessed that we could still see this pattern hold to a bearish case because the RSI and the MACD are still maintaining under the midway point 50 and also under the zero axis. Looking at gold on a weekly basis, the market crushed the level of 1,280 overnight and now exposes the region of 1,255 to 65. It is assessed until we get a break above 86 to 88, then the market pressure will be to the downside due to the fact we took out that key level of 80. Wrapping up with oil, the market is returned back to the top side after rallying 1.5% nearly overnight and back towards our 64 level. It is assessed that I'm not a bear, I'm just looking to buy on dips, and unfortunately we didn't quite get there because the level I was looking at was 61.5, but the market failed to produce any weakness and rebounded off the lows of 63 and now it looks back towards 64.90 and maybe up towards $66 a barrel. I'm still a buyer on dips if we can get a pullback towards 61 or maybe $60 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the great start to the new day.